Guys, Trump won the election 1 week ago and stocks have soared since then. Is this a new Trump bubble in stocks? Now, we always talk on this channel. If you're new to this, I'm a very big believer in valuations. The issue is we don't know when valuations are going to matter, but when they do matter, they will matter with a vengeance. The question right now is the Trump stock market pushing this into bubble territory? Well, guys, my personal belief is we've been in bubble territory for a while and might not feel that way because it's been going on for so long. After COVID crash, we got basically to very close to fair valuations. And since then, it's just been a ramp up in price. We've almost tripled in price in the S&P in the last 4 years. That alone should make you wonder, isn't this getting a little frothy? The U.S. economy hasn't tripled in size in the last 4 years, almost 5 years now. You sit there and go, that just feels kind of odd. Now, every week, I talk about the stock market GDP ratio in our community chat, and I also talk about the 10-year cyclically adjusted PE ratio. We're not trying to beat a dead horse, and I'm not trying to tell anybody you should sell, you should buy anything. What I'm trying to tell you is to understand where we are in terms of valuation relative to a cycle, right? Because I always say there's 3 guarantees in life: death, taxes, and cycles. We're always going to cycle in and out of things. And right now, stocks are killing it. You have Nvidia, you have the NASDAQ, you have S&P all at all-time highs. You have these companies that have gone up a ton because of AI. But don't forget, we also had electric vehicles. We also had cannabis. We've had internet. We've had real estate. We've had all these ideas. I remember EV just 3 or 4 years ago, people saying that's the future, that's everything. Where's the talk about EV today? It's nowhere. It's all AI. And guess what's going to happen? At some point in the next few years, AI will not be the new, brightest, and best thing. Look at the internet back 25 years ago. That was the newest, biggest, and brightest thing. Is the internet still around? Absolutely. Is it much larger than it was 25 years ago? Absolutely. But is it a bubble? I would argue it is not. Why? Because we got rid of all the junk back then. That's the great thing about bubbles and crashes. They gets rid of a lot of junk. And that's what we're here to look at. Guys, if you're new to this channel, this is our reaction channel. We talk about the news, we talk about the economy, we talk about individual stock results. We like having discussions about this, but I don't want to teach this method of getting into the nitty-gritty details. And this week's a big week. We've got CPI and PPI being reported, and we're going to react to that. We've got Shopify, Cisco, Home Depot, Alibaba, Disney, all reporting this week, and we're going to give you reactions on that. So if that sounds appealing, not just for this week, but for future weeks, do me a favor, subscribe to this channel. And if you happen to be on Twitter, I'm very active on Twitter talking about all of these ideas at EMPaulG. Give me a follow there. And I like to talk about these things. I like to talk about all these ideas, but I don't make my investing decisions based on short-term news. This Trump win is short-term news. At the end of the day, in the short run, stocks are a voting machine. In the long run, they're a weighing machine. So in the last week, people have been voting with their pocketbooks saying, Trump win is great for stocks. Now, guys, this is our stock market GDP ratio going back to 1929. We are currently, as of this morning, 119% overvalued. Fair value is 2737. Now, you might sit there and say, come on, Paul, that's absurd. That's over 50% fall to get the fair value. I'm just pulling up data going back to 1929. I do believe you can justify much higher valuations than history shows. But at the end of the day, can you justify 119% in excess of history? Maybe. Now, does this mean you should sell stocks? No. Even though, you look at history, whenever we're this overvalued, returns over the next 10 years are not good. Here it's showing at 50% overvalued, the average is negative 2%, not including dividends. We're 119% overvalued. Now, for those who believe that the stock market GDP ratio is antiquated, let's go to 10-year cyclically adjusted PE ratio. What that does, it takes all the last 10 years of earnings on the S&P, brings it to today with inflation. So 10 years ago is being really inflated because we've had so much inflation lately. And it takes the price divided by that. Guys, we're 122% overvalued based on that. The historical average is 17.17, and we're at 38.25. The peak in the dot-com, I think, was 42 or 44. So we're not far off from that. Now, again, what does this mean about the future? What it tells me about the future is the next 5 or 10 years, in all likelihood, will not be as good as the last 5 or 10 years. That's in all likelihood. Is that a for sure guarantee? Not necessarily. If we have major inflation, let's say we had 20% a year for the next 10 years, my guess is stocks are pretty fairly valued right now, if not undervalued. But the question is, are we going to have 20% inflation for the next 10 years? Well, the argument out there would be, well, we're printing tons of money. Yeah, we're printing a lot of money. We're printing an extra $1.5 trillion a year. But again, that's only increasing the money supply by 4 or 5% a year. It's not exactly like this 20% increase in money supply. And guys, there are millions of factors that go into the economy, millions of factors that go into investing. The question is, what factors matter? What factors really drive it? And over long periods of time, the correlation of stock market valuations to performance and price is very highly correlated. In some metrics, 0.85, which is a huge correlation. Perfect correlation is 1. So you look at the saying, all right, in the short run, anything can happen. In the long run, the less you pay for free cash flow, the better you're going to do. So I don't want anybody making immediate reactions saying, oh, I'm going to sell stocks that are so overvalued. That's the mistake that I made years ago. Don't make that same mistake. Because the difference between the average viewer watching and me is I've got 8 businesses upstairs. I got 1,000 apartments. So even though I missed out on a lot of stock gains, I still made major net worth gains because I owned real estate. I owned businesses that all grew. That's the main difference here. I had this channel. This channel was nothing 5 years ago. Now it's huge and it generates a lot of revenue and it's worth a lot of money. So I always want everybody to remember that everybody's in their own situation. Warren Buffett is in his own situation. Can you look at people and sit there and say, okay, what are they doing? What does that mean? Absolutely. And I'm going to sit here and I own 18 companies, actually I own 21 companies right now, 18 of which are on my want to own forever list. But do I own my full positions on them? No. Why? Because stocks have gone up a ton. And I want you to be the kind of person who is better than the average person. I want you to be the person who says, hey, I think this company's worth 100. If it sells below 100, I'm going to buy some. If it falls even further, I'm going to buy some more. Because nothing is better than buying a company as the fundamentals are staying the same or getting better, but the price is going lower. That's what we should want. And the benefit of some sort of market correction, crash, whatever, bear market, is that typically happens. And that's what we should root for here. You know, Morgan Housel in his book always talks about every past recession and crash looks like an opportunity. Every future one looks like a risk. I want you to become the person who every future one looks like an opportunity. That's the big key there. Because our average viewer has 30 years until retirement. So you have a lot of upside along the next 30 years. And that's what I want you to focus on. Because I'm quite confident that as of today's pricing, even 30 years from now, we will be much higher than we are today. I think the US economy will be much higher than it is today. And that's what I want us focusing on. The other thing about what we do on this channel is it's not just about buying individual stocks that are most popular. It's about finding value. We're here to teach that process so you can find that value. Now, guys, when I talk about this, the reason you probably sit there and say, wait a second, markets are 120% overvalued. Why would I not buy? Guys, in 2000, the NASDAQ peaked at around 5,050. It went on to fall 83% to its low. If you started dollar cost averaging at the very peak of the market, at the very top, all along the way to today, you would have made about 13.5% return, even though from peak to today has only been a 6% return. That's the power of actually dollar cost averaging. Because along the way, you're buying at all these levels, all the way down, all the way up. And sometimes you're underpaying. So you can actually beat the market by dollar cost averaging as long as you're disciplined enough to do that. And that's the hard part. That's the part that took me a while to learn, and I'm here to skip those steps for you. And guys, what's interesting is look at Tesla right now. Tesla's at $344. In the last 1 week, it's up 42%. Why? Because everybody sees the affiliation of Elon Musk with Donald Trump, and they think this is going to be huge for Tesla. Very well could be the case. But a company, a multi-$100 billion company being up 41% in 1 week because of a presidential candidate, wow. Not only that, during the election, Bitcoin was skyrocketing, and it's already up over $80,000. Why? Because Trump came out this summer and said he was going to be a champion of Bitcoin and crypto, which is interesting. Now remember, my view on crypto is in its current form, I don't think it's going to last. There's no intrinsic value to it. There's no value to it. And the other thing is, I hate to say it, but I look at the people who support Bitcoin and crypto and I go, yeah, those aren't the people I really respect. Just like in 2000, when I looked at people who were supporting all the hype stocks, they weren't reputable people. They weren't people that lasted the test of time. Did that mean the internet didn't work? No, it just as an investment was came out in a different way. Same with Bitcoin and crypto. I buy into the idea of having a less regulated currency. But you got to remember, with the less regulation of currency, do you think the government's really going to be a fan of that? They're going to sit there and say, yeah, why don't you guys do your own thing, have your own currency. Nobody's going to hold you accountable. You can do whatever you want. We won't watch it. Are you kidding me? Are you absolutely kidding me? There's no way they're going to allow that. There's no way that happens. So in its current form, even though crypto is skyrocketing now, I believe that's all part of the whole hype in the QQQ and NASDAQ. Because if you look at the history, when NASDAQ's up a ton, so is crypto. When NASDAQ's down a ton, crypto is even further down. So I look at that saying, okay, are we really in the early stages of this thing going up even higher? Hey, I've been wrong for a while, so take that for what you want. And I might be wrong forever on crypto, but I'm okay with that. Because I look at it just saying it doesn't make sense to me. If I buy a Bitcoin today, it's the greater fool theory. I have to find somebody who's going to pay more for it down the road without any intrinsic value to it. It's not like buying a stock where you have a business that's fundamentally growing. You have a business that's generating cash flow. And you might sit there and say, but Paul, I don't get that cash flow. Yes, you do. It either builds up the bank account, they can buy back shares of that money, make acquisitions, grow the business, or pay it out in dividends that you will end up getting. Now with Tesla, back to Tesla, I'm confused by this because I look at this thinking the bigger and bigger Tesla gets, the more and more it has to be like other car companies because of the auto union and how strong they are in this country. But obviously the market's seeing this ownership, this Trump presidency as being a huge, huge tailwind for Tesla. But I think that most has to do with the fact that Elon was so pro-Trump along the way. And keep in mind, guys, I like Tesla cars. I love Elon Musk. But remember, you got to keep that separate from the stock price. Because if you sit there and say, no, Tesla's amazing, Elon Musk's amazing, great. Instead of 345, make it 3450. Those assumptions are still correct. That means you're a buyer at 3450. Add another zero. Tesla's still amazing, a company, and Elon Musk is still a brilliant person. Buy it at 34,500. My point in all this is if you keep adding zeros, just like with crypto, the story about why it's so great has nothing to do with fundamentals. You keep adding zeros to it, the story is still the same. When you incorporate fundamentals and valuation in, then you add a couple zeros and the story completely changes. That's what we're talking about with investing. And that's what I want you to understand on this 24/7 channel and on our main channel. If you want to watch our video on making sure you don't stop investing, preparing for a market crash, please watch our next video. Thank you for your time.